The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. On the 20th day of September, a record-breaking day. Dow makes a new all-time high. It's at right this moment 26,666, just about the high of the day. Still in that leg D in the daily chart, and it's broken out in the weekly chart, and that weekly chart has an F attached to it. But the MACD and stochastic, as I've been saying all this time, is still very strong, and the daily technicals pull back sharply, but it really didn't impact the price of the Dow as it broke this trend line resistance around about 25,990, and then it just continued higher. So what we're looking at here is that the monthly chart has now broken out. Question is this an F or is it a brand new leg B? I know this is one of the things that when we're seeing an alternate count, you sometimes just have to set it aside and say, look, the MACD is still very good. Instead of pulling back, it's deflected back up. And that is always a positive, at least for a couple of bars. In this case, it's a monthly chart. And the stochastic hasn't come back strong enough. It's at 77%. So alternate count, just for now, at least I'm putting an F for this moment, but it's going to be the daily that tells us the story, because the daily will lead the weekly and the weekly will lead the monthly. So don't have to make a decision yet about the cup formation that's formed in the monthly chart. Now, what's really important is that in this pattern here that I always look at, the rectangle formation, my rule of thumb is that a majority of times, and when I say majority of times, I really do mean a majority of times. I'm talking about quite a high majority, something like, I'd put it at 75 to 82%. When this is a rectangle formation and the price has an inside buy mode, it can go to a D or an E. In this case, it's even gone to an F. And then what it does is it can go right up to, right on, or just above the previous high in this flagpole. And this is this huge long move up that went to the January 2018 high of 26,616, also Chapman Wave 5. And then it pulled back, and it was the only index that made a lower low than the February low in April by just 15 points, but it did make a lower low. Then it started a brand new A, peak B, peak C, a D, which has the potential for what I call an unconventional flat-based Chapman Wave restart, a long complicated name, but it actually is in a description of the whole thing. And then it goes to this E and this F, which, if the MACD and stochastic keep holding as strong as this, could very quickly turn into an F/B. And that means we have to wait until about a week or two before we even have a clue, unless there's a really sharp pullback below 25,600 in the interim period. Okay, so that says, so far everything's good. Even this very sharp spike to a leg D in the daily chart. MACD did turn back up again, as stochastic is at 86%, not 90 or anything like that, but 86% is still very good. So the parameters to watch very simply over the next week and a half are, now it's 26,400 to 26,350. That's a kind of a cushion that it should hold if there's any pullback. And certainly 26,142 is the 14-period moving average. The close below that would be very negative. However, if it holds here, and even the gap up today, if it barely fills that gap and it has a higher high and goes to 26,700, that's going to be very important. You remember the study? I hope I can get to it again soon. I didn't do anything because I needed to see how the Dow would, if it was going to break above the previous high, how would it do it? Because I'm looking at a monthly study, so I really need to give it a little bit of time. And that let me see if I can find it here. I'll go to the front page. Let me just do that. Front page. Here's this. I believe this is the one. I hope it is. Nope, that's not the one. That's my cash index. This is a very interesting index right now because Amazon hasn't broken out, and neither is and Home Depot's just about there, but it hasn't broken out yet. Yeah, I don't think I can find it right now. I put it somewhere that I thought was very important. No, I'm not able to find it. So I'll be back in a moment. In the break, I'll check it out. It's one of these charts over here. All right, let's get back to the news. And what it had was 27,200 was the major resistance going into the end of this month. There's a rising trend line. S&P. Do I have a caller? Yes, I have a caller. I have Ben. Ben, how are you?
Good, Basil. How are you?
I'm good, thank you.
Yeah, so two questions. I heard yesterday you mentioned the rotational aspect of the market, and you said you discovered it, I think, around 2010.
Yes, in the summer of 2010.
That prior to 2010, you didn't see rotational aspects, or I guess that was a little confusing.
Let me explain what basically what that. I wonder if I can go back in the chart here. Let me do this. In 2010, after the low that was made in 2009. When there was that very sharp rally and we got to basically right there, that was April of 2010, the Dow had gone from the 66, let me go to the Dow. I've got the S&P, but we're talking about the Dow, so I'll go to the Dow. The Dow had made its low at 64.69, I believe. Let me find it. Yep, there it is. And then it ran up and had an April consolidation. And that consolidation, it went from 6,469 to 11,258, almost a double. That was a huge move. And then it pulled back pretty sharply. It went down to the 9,614 level. So that's 2,000 points. That's a big move on a percentage basis. But then it kept, but then what happened is during that whole period, starting from April until it broke back up in about, let's call it October, November of that year when it broke out, that whole consolidation, instead of coming back, not even to the 200 period moving average, which should have been around about 8,843, it never did the retest of the 64.69 low of March. In the Dow's case, it was March, I think it was the 6th. And it never did that retest. And that was very unusual because almost every other time in these major turnarounds to the downside, you would get kind of an H formation. But what happened that summer is that the stocks that had led the market up consolidated, but as they consolidated within the same sector, let's call it the Dow, within the Dow itself, a whole bunch of other stocks in the Dow started to rally quite sharply. I think it might be, I wonder if I can do that right now. I think it had some of the bank stocks just started to move higher.
I guess I'm not looking for the details of that, more so than, the just philosophical. I mean, hasn't there always been a rotational aspect where managers just try to find the next thing that's, fairly
correct?
Moved
yes.
Yet?
But when you have these sharp down moves, it usually entails pretty much 80 to 85% of all the stocks going down. I'll talk about it as soon as we get
folks,
back.
This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks, we're back, and we're back with Ben. Ben, you're still there?
Yes, I am here,
Yes,
Basil.
I
had you on mute, sorry.
So, Ben, this is really what I wanted to explain. I think I've got the gist of your question, but to answer it, I need to show you that in my chart, if you go to the monthly chart, back in May of 2011, there was a pretty sharp decline from 12,876 to 10,400. So in that particular instance, what we saw is a majority of the sectors and stocks within the sectors all came down, and it was really a sustained selling. It was sustained selling pressure. In the correction of 2015 from May, where the Dow was 18,351 down to 15,370, again, it's 3,000 points, not the biggest deal, but it's big enough because that one took the longest time. And then you got that H pattern where you came down, and that was a period where I believe, if I'm correct, that once again, a lot of the sectors came down in unison. And this example that we're looking at here, oh, and I meant to show you that I'm going to go back again, the MACD into the October low of 2011 already saw for a couple of months, the MACD, the fast-moving average, the green line, the 9-period differential, was underneath the slow one, the red one, and the stochastic had dropped sharply. And the correction that occurred back in 2015, the MACD had already turned down and was very wide, the distance between the two moving averages. This time I was saying to subscribers, I can't even put a down arrow in because the MACD has not crossed negative, and it went to almost, I think it was a 1 differential back in June and July, and then flattened out.
I guess rather than getting into the details of the H patterns, I'm just asking more of a high-level question. So, you've been in the market for a long time, and I'm just wondering, before 2010, did you not see these rotational aspects where they just keep, if there's nowhere else to invest around the world because yields are so low? I'm looking at more like that, or do you think there's a whole different paradigm shift in how fund managers
there is a paradigm
rotate
shift.
their money after 2010?
Yes. So let me because this is a perfect example. Look, if I said to you 3 things, if you had been in the market for decades, and I said to you three things. I said, interest rates have risen very sharply. Number one, for the very first time, you've got rates that are looking like they're going to break. They could have the potential to break topside much greater than we've seen in decades, right? That's number one. And then I said to you that the NASDAQ has been failing for a little while here to confirm the rally in the Dow, and it's only the Dow 30. And not only that, you've got the IWM, the Russell 2000, which is really struggling, and the semiconductor index, which had really led the market up and down for over 2 years, was kind of failing, although it's having a pretty decent day today, but it's still way off its high. Then you have to say, whoa, what kind of discrepancy is that when the Dow is screaming to a new high? It's up in percentage terms, up 0.97, and the S&P is below that. The NDX, the QQQ is only up, is less than the Dow. So I'm looking at this and I'm saying, this is a demonstration of the rotation. And then out of the blue, the XLF, which was really looking, I mean, 2 days ago, I was looking at Goldman Sachs, and it was a very poor performer. And within 2 days, the XLF has gone from 28.20 to 28.99. Not a big deal, but on a chart formation, all of a sudden it's come alive. And what's happened? You've got a couple of financials now in the Dow that is helping ameliorate anything that's weak in the Dow. So that's really what I'm talking about, that until you have a unison sell-off where there is some kind of a bad news event, whatever it is, geopolitical or economic, and that just permeates the market for a couple of days on end, and then it turns out to be a couple of weeks, that's when you get these major sell-offs. And that's the reason why, on the one hand, I'm saying to myself, wow, I should never have been short the Dow without switching to the long side. The moment it broke out, and in fact, on the daily chart, the moment it broke the resistance right here, 26,000.
Yeah, right. I guess no. I just happened to remember you bringing up 2010, and I thought the way you said it, you said I've been monitoring this rotational aspect since 2010. I thought there was something that changed in some kind of trading aspect from fund managers is kind of what it sounded like.
No, actually what's happened, except for that May, that big consolidation that we saw right here, that was from May at 18,351, May of 2015, which actually lasted to the double bottom low, and then it really only broke out almost a year later. That was the longest, but not the deepest, but the longest consolidation. And that said to me, I've got to constantly keep watching.
Testing in the water. Wonderful day.
Oops, hello?
Yeah, I'm sorry. I'm in a bad area.
Okay.
No, that's okay. I just wanted clarification because that's what it sounded like, that 2010 there was something different that changed. And I was just thinking with technology that's been around forever, since at least the 90s, that I would think the fund managers had plenty of sophisticated tools to keep the rotations going. So I just wanted to clarify that. And then the second was, whenever you get a chance, because I've consumed a lot of your time, I just wanted to get your take on FANG stocks. If you think that will all of a sudden kick in here as part of everything else, or if you think they may drag and prevent this whole thing from taking off to another level, before some kind of a consolidation.
That's a great question. I'll deal with it right now. You can listen afterwards. Thank you for calling, Ben. So let's look at Facebook. Facebook made its all-time high at 220-something, 218.62 on the 25th of July. And it's come down, and just 3 days ago, it was under 160. Now it's at 165. So that's the one FANG stock that was basically one of the leaders on the way up. Huge, massive gap. I mean, when we talk massive gaps, this is probably one of the biggest gaps that I've seen in a long time. 212 down to the next day of 173. That's the 173 to what did I say it was? To 14. So yeah, so this is 30-something points, and you're talking about one of the leaders. So that's one. If you look at Google, I'm just going to Google instead of the Google L, and this is the Alphabet stock. That's gone from a high of 1273 down to a low just 2 days ago, back at the 1157 area. So in points, it's had bigger moves, but this is certainly one of the longer consolidations it's had since the big consolidation back in February of 2018, where it went from around about 187 to 980. So that's that. Netflix, I wonder where Netflix is right now. Netflix is down $1.36. Look, so that's what I mean by rotation. So as your leaders and all those people that were getting into those stocks start now to pull money out and say, whoa, it's going nowhere, let's go somewhere else. They are.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. TFNN has just launched a Tiger Dollar sale for one weekend only. Through Tuesday, September 18th, you can get up to a 50% bonus on your Tiger Dollar purchase. Tiger Dollars never expire and can be used for any TFNN newsletter or service. TFNN has a new website launching in the coming weeks, and to celebrate, we're having a Tiger Dollar sale. For all the details and to get up to a 50% bonus on your Tiger Dollar purchase today, visit the front page of TFNN.com before this sale ends Tuesday.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So let me just finish up so that Ben is not on right now, but he posed a couple of kind of issues, and I'd like to just deal with those. So the QE, the funding of the market that had gone on for so long by the Fed, that stopped for a while. It's really impressive that the market has had its own momentum, and that's really the, I was a sprinter in my youth, so when I talk about passing the baton, remember the Olympic Games a couple of times over the many years, American runners have lost a relay race because they messed up passing the baton. It's a very special thing. You need to practice it over and over and over and over to get it so that it's absolutely in sync. Your hand goes out behind you and it has to be passed exactly right. Well, the whole thing with the Fed was, are they going to be able to stop basically that funding, putting money out there? At the same time, will the economy have enough strength to keep going so that there's this elision? You know, in music, in Bach's day, there were these themes that would go from one phrase and then kind of overlap into the next phrase. And that's called an elision, where it overlaps very synchronously. And that's really what they wanted to see. They wanted to see, could we do? And in a sense, they've done it very well. And up until now, the big test is going to come. And we're going to talk about that in a moment. So there are a lot of things that were helping the market. That's number one. Number two is the whole idea of fund managers looking for something else. It doesn't mean to say it's going to work. In the beginning, when they went to the IBB, the NASDAQ biotech sector, after it made its major top, they were wrong. They used to be right to the minute. It saved them every day, every week, every month. For years, they could go to the biotechs and it would save them. All of a sudden, it was completely wrong. So then they had to find something else. Now, I hope for subscribers, we've been able to find that something else. We've got something that's worked really well up just the last week. Hopefully, that's going to keep going. You don't know. But all of a sudden, you've got another sector that was on fire literally up until December, January of this past year. And then what happened is, they took heat, and that was Bitcoin. Then you've got, look at the stock, Tilray, medical cannabis, trading out 175, down 38. Yesterday, it gaps up from the close on the round number low 132 and a high 155.10, high on the 18th. Starts of yesterday at 151.40 and doubles to 300, round number 300 on the 19th. That's yesterday. Then it gets stopped by the SEC. I think there's a rule. It dropped 40 points. It moved 40 points. It dropped 40 points. They had to stop it for a certain amount of time. Then they brought it back. I think they did it 3 times. And then today it was up after the close yesterday at 132, round number low. It closes at 151, and it opens today at 214.11, goes to round number 244, has a round number low of 158, and closes at this moment at 177 round number. Look at these round numbers. There are people here that are hysterically either buying or shorting or doing something, because the price is moving in such a way that it looks to me as if this could be a vertical spiral to the upside with volume, to be a volume climax to the upside. It's going to could take a little while before this regains its composure. 140 to 121 is absolutely key support. It could come down very sharply. So I wanted to bring that up. I was just about to talk about it yesterday, and I forgot it was a half-hour show that it ran out of time. I actually took CRON. Was the question I had. I thought I was looking at corn. It wasn't. It was CORN, which ran up to a leg D, and it too had a very sharp spike to D at 1530. This is Cronus Group. I think it's in the same area. Goes to a leg D in the monthly, a leg D in the weekly, and a leg D in the daily. And yet it's holding quite well. It's up 62 cents. So maybe not all of them are going to have the kind of depth of consolidation. But here again, within a sector, you've got the rotation. GWPH is one that was on our list. I have a subscriber who wrote to me. I didn't have a chance to do anything about it, and now I can't find what he did. GWPH, there it is. Michael wanted to know, hello Basil, I've been holding and accumulating dips for the past 12 months. Looks like a breakout coming soon, Mike. And that was yesterday morning. I didn't even have a chance, I think it was the 19th, yes. Didn't have a chance to talk about it. And look what happened. It screamed up to 166.42 and then closed down at 150. I mean, that's a pretty big pullback. And today it went to a higher high, GWPH. At 165.85, it's up 12. So one by one, within sectors now, you're getting this kind of market hysteria. I think GC is a CGC is another one. I don't want to spend my time on this. I just want to show you the rotation that's going on. Peak F in CGC is another one that's called Canopy Growth. I got a leg F in the monthly, a leg G/A in the weekly, and a peak F that was right here on the 5th of September, round number close 52, has a high of 56.60, and it's trading now at 50.69. Kind of struggling, but it's up in the higher ranges. So this is that whole thing within a sector. You can get the same microcosm of sector rotation. That's really what I want to show. Now, I needed to show a couple of things here. Look, gold. Don't know if I did it actually. It's already gold is trading up $1.5. Look at this action. It's just stuck in a range here. It has not been able to get out of the range, and that is to clear the high of 12.18, one high, and the other was 12.20 something, 12.20.7. So let's say between 12.20 and 12.22. If gold goes above that, that's going to be really important. And look at the dollar. The dollar should have given gold an unbelievable opportunity to be in the 1300s right now. And gold made, this is going to be one of the most important candles we've seen in the dollar for a long time. It hit a low today of 93.83. We still remain long. And had a high of 96.98 from the 90 low. And now it's in the lower range, right? 3 points down, 3 points up, 3.5 points up. No, 5 points up. So it's in towards the middle to the lower range. This candle has a chance of becoming a Chapman wave Roman candle low, not a high, but a Roman candle low. And it says that if there is a close above the dollar's high of today, if that remains the high of 94.56, if there are 2 closes out of 3 consecutive sessions, this is an important low that was made right just above the 93.79 200-period exponential moving average. But the weekly chart says, wait, we've crossed negative in the MACD. Stochastic's down at 48%. It has to have a fabulous move back to 94.87. I think it's 87. 94. Let's call it 94.70 in the weekly chart to be able to have some kind of a trend change. So it's almost a 1-to-1 to the downside in the weekly chart, A to B equals C to D, watching it very closely. And yet gold hasn't got out of its way here. I'll be back. We'll talk about crude oil as soon as we get back. Crude oil right now down 27 cents, having made a nominal new high above the left side high. Good action, actually. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
If anyone is doing trading, I just got a D in the 2-minute E-mini chart, S&P. I got a potential F in the 5 and a D in the 10-minute. So maybe there's another one of those little choppy pullbacks. But so far, the containment has been on the upside within about, I'd say, 30 points, just a 30-point consolidation at the highs. So, okay. So what we were looking at here is I had a question about EEM. I'll do that right now because it kind of pertains to the rebound that's occurred because the dollar's pulled back. So the rebound in the EEM trading at 42.90, we were talking about this the other day. So it's making a trough E. If ever this was the opportunity for the EEM and the FXI to at least attempt a rally, it has to happen real soon. And the EEM has to cross above 42.90 where it's at now, the 9-period moving average in the weekly, but it really needs to cross above 43.47. Let's call it 43.55 to give it a little room. It needs to be above that in the weekly chart for the first time to close above the 14-period exponential moving average since, I think, March. And let's see the FXI, because I want to put the whole thing together. We will look at the euro, etc. So, yeah, this is a nice, same thing in the FXI. Nothing great, but another big spike. Can it last? That's the big issue now. And the big question will be answered if, let me just go through this again. I think it'll be answered if gold, this is the metal itself, which is up $1.60, just terrible action considering, not terrible action considering the low below 1170 at trough E in the daily, even the at 1167.10, even in the weekly chart, G/C, because it has gone sideways, but it hasn't made that V-shaped recovery, which is always a powerful motivator for markets to continue in that direction when it makes either an upside inverted V or a V-shaped pattern at the bottom. So that's very important. If you look at silver, it's the same thing. Silver actually has a weekly chart was not as good, but now that doji candle from last week has held so far this week, there's a little bit of a sign that says, hey, I'm trying to attempt to close above the 9-period moving average in the daily, but definitely the weekly, sorry, the 14-period moving average in the daily is going to be important. It needs 1440 and it's at 1429. It should do that in an eye blink with the dollar so weak. EUR USD, look at this euro-dollar currency pair. Now that's much nicer. That weekly chart, I mentioned that earlier in the week, that's looking better because it's going for the 200-period moving average for the third time. And this time, it's so far breaking above it. Leg C, stop dead at the 200-period moving average of the daily. So far, this is nice action. This is what you want to see in gold, and it hasn't happened yet. It has happened in currencies. Why? Because there's a currency deterioration in the dollar, which impacts absolutely directly. It goes to the foreign currencies, USD, JPY, that is the yen, US dollar, and the yen. trading quite nicely. It's extending this leg D, and it really needs to get above 113.32 to start a leg D in the weekly chart. I think it's going to do that. Hasn't got very far to go, 112.50. And that's going to be impressive because that'll make a leg C in the monthly chart. And C in the monthly chart with improving technical says maybe it can go higher. So I have to watch this dollar very closely because my thesis has been that the dollar's going to consolidate using more time than price. So far, it's still more time than price, but this Chapman wave stalk leg formation says if there is a close for 2 consecutive weeks, this is a weekly chart, 2 consecutive bars in the weekly, under 93.71 and 93.16 is the 200 period exponential moving average support, that suggests that this dollar can actually, it could have a problem for longer. And that's going to be very important. Why? Because this is leg D to the downside, close to the 200 period moving average. You've got the potential for a soft W formation in the MACD. Hasn't formed yet. That right shoulder is still coming down. And the stochastic has had a very nice positive divergence, but it hasn't been reflected in price yet. Dollar is still weak at this particular time, down 42 cents. Couple of questions. Yep, Boeing did act very well. Nice percentage move, up 4.36, up 1.19, does help the Dow. Yeah, I said that it's going to be stuck in the range. It is stuck in the range, but believe me, to go to 374.48, the most recent high back on the week of the 8th of June, and it's at 369. We could do that in an eye blink. And this is leg C, and I've got it as a blue leg C because the MACD is good and stochastic is good. I'm probably going to be wrong here because the dollar's acting, the Boeing is acting very well. And it looks to me like it is going to pierce the left side high. If this rally holds today into tomorrow, it should be able to do that pretty soon. Next question is XLI. Yes, XLI, the industrials, that's where the money's going. And that's what I was trying to explain to Ben. He understands it, but I was trying to explain that from 2010, this is the way almost every, except for that 2015 long sideways move, throughout the consolidations since the 2009 low, it's been rotational to the extent that another sector has held the market up or actually allowed the market to go even higher, even though you're looking and saying, but wait a minute, my stock is looking terrible and the market's going higher, or my stock's fantastic. I don't care what the market's doing. And that's what I mean by this rotational aspect. It can have a very positive or a negative effect. At this point, it's still a positive. So XLI, yep, this is not an all-time high. It has to go above 80.96, and right now it's at 79.92. So it has about $1 to go. Look at the New York Stock Exchange. That was really lagging, and now it is running very sharply. I have to now call this a leg C. So this is still a very big positive. It's in leg C in the daily chart, leg F in the weekly, and it has a long way to go to get to that peak D that was made in January. It's at 13,217, up 95.86, up 0.73%. So we've got to watch that. IWM, I just want to do this quickly. IWM has a nice session today, up $1.30. And that has to turn into a cup formation. And one of the reasons I said to subscribers, we're not even thinking right now of doing what we normally do at Dow, leg D, or maybe E, going short, because the MACD just crossed positive. I respect that. Look at this, the MACD in the Dow daily. Don't put MACD, type in INDU for the Dow. There it is. So for the Dow, how many times am I going to type that? Yes. Look, the MACD is sharply cross positive. It was negative the other day. It was actually looking very poor. And the stochastic was very poor. Now the stochastic's at 86%. This suggests that we can consider that there'll be a consolidation, but maybe it's just to fill one of the gaps, this past gap right here, and hitting 26,400 again, some kind of consolidation. Have to be impressed with this breakout. That's all I can say. I did all that, did that. So the question I had was with GWPH. So if you were buying all the way down, and I remember I had said For subscribers, we're going to have some kind of configuration of buying in the 156, 146, and 135, something like that, 135-ish area. And that would be the three positions. And then that would be the plan. I didn't have the courage to have the plan. I just didn't feel like having something at 156 and then watching it go to 135. I personally can do that. I just didn't want subscribers. Just didn't like that idea, because if that failed, we were in real trouble. But now it's straight.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Don't forget Steve. Don't forget Dave. Don't forget Tom coming up. I'll be back tomorrow, of course. So let me do this. I need to spend just a moment. I want to talk about the TBT, which is the ultra-short Lehman 20-year T-bond fund. It's making a leg E and a potential peak E right as we speak. And that high was 39.07, going from 35.27 to 39.07. The 120-minute chart is just reversed sharply. What I'm looking at here is there's a chance that bonds could, in fact, have a little bit, the TLT, a little bit of a rally, and now we could put the whole picture together. Why? Because if bonds make a V-shaped recovery, if tomorrow, for whatever reason, let's just imagine that we've got a leg D in the down, all of a sudden there's a pullback tomorrow. I don't know how deep the pullback will be. Normally I would say it should be very sharp. We've already made an all-time high, but having just made the all-time high doesn't mean to say automatically there's going to be selling pressure. There might be. But if bonds start to rally from 117.26 and you're all of a sudden looking on Tuesday, Wednesday of next week and say, hey, it's at 119.23 or a little higher than that, and the TNX, which is in leg, this is very interesting because the VX, the real leader, the 5-year, hasn't got there. This is in leg E. If it suddenly turns down sharply, not having made a new recovery high above the peak F that was made in May at 31.15, 3.15%, this is going to be very important because if the VX would fail to make its high, it could be an alternate count F/C, but it did make a new high. And the 10-year and the 30-year didn't make new highs. Look, the 10-year TYX right here. Yes, I think it just snuck above. So it's just the 10-year that didn't. So the 30-year has 32.47, right, 32.48 by one tick and a leg D to the upside. I think that yields this coming, the next 3 to 4 sessions are going to be very, very important because if there is a sharp pullback in yields and the TLT rallies, will the market start a pullback of that? So far, those are the only clues we've got, at least I've got.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.